It was another unsettling week for the stock market, with all three major indices falling Friday. The Dow Jones ended the day down nearly 500 points. The Nasdaq also fell almost 200 points, and the S&P 500 dropped 64 points. Alexandra Semenova joins us now. She's a reporter for Yahoo Finance. Did we see the kind of capitulation in the markets Friday that signals we've hit the bottom?
Absolutely. I mean, we're not at a bottom just yet. It's definitely been a wild week, not only for U.S. stocks, but for global financial markets, as investors worry that central bank policies to rein in inflation will trigger a recession. And those concerns were certainly accelerated today, with the Dow Jones Industrial Average falling to a 2022 low and the S&P 500 coming awfully close to that. Now, prior to this rout, the major averages hit what everyone thought was a bottom in June before a temporary relief rally this summer. But with stubborn inflation and Federal Reserve officials continuously asserting that they're willing to do whatever it takes to restore price stability, even at the expense of economic growth in the labor market, investors are shifting their outlook. And the attitude is that there's more pain ahead as Federal Reserve rate hikes continue to weigh on markets, on growth, and potentially on the economy.
So let's take that a step further. The Fed is aggressively raising rates. Why aren't we seeing more progress on inflation?
So usually these policies take some time to play out. We did see some moderation in inflation in July and some moderation in August, but it still remains near a 40-year high. And the concern now has become that the Fed will act too aggressively and over-tighten monetary conditions to the point where they meaningfully stunt growth. And that will weigh on corporate America. It'll weigh on the labor market, and it'll make the economy much more difficult to navigate for Americans. Federal Reserve Chair Jerome Powell said that a soft landing, which previously investors were hoping that he would be able to engineer where the economy avoids a recession as interest rates increase, will be very challenging and will depend on how quickly prices come down. And the Federal Reserve will be assessing economic data points on a meeting by meeting basis.
Okay, so are we heading into a recession, or based on the growth data, are we already in one?
So we are in a technical recession because we have seen 2 consecutive quarters of GDP slow down, but the labor market remains strong. The last reading was more than 300,000 jobs. Consumers are still spending money despite record inflation. So there is some debate about whether or not we are in a recession. But again, these central bank policies do take some time to play out. So we may see in coming months that the labor market will start to show signs of meaningfully slowing down and consumers scaling back on their spending, which could trigger a meaningful recession.
So how can investors with these major losses sort of mitigate that going forward, especially if they're nearing retirement?
The important thing is to focus on the long term and not to make any kind of rash decisions when looking at markets today, to avoid any kind of panic selling. It's good during recession to maintain cash, but investors should avoid any kind of major changes to their investment portfolios right now. It's always good to kind of do some housekeeping around your investments, focusing on companies that have signs of meaningful long-term growth and focusing on the long term, like with retirement plans and 401ks.
Alexandra Semenova, thank you.
Thank you so much.
You're welcome.